Hello and welcome to the day ahead. It is the 15th of January. I'm Nadine Blaney. Well, commodity tailwinds are expected to lift the local market at the open, and that is despite indices on Wall Street heading in the opposite direction, led by a drop in the Nasdaq, with tech shares declining as investors took on a defensive position. Bank stocks extended recent losses following some mixed quarterly results, though in fairness, they have had a pretty strong start to the year in the U.S. Bank of America beat profit estimates on a boost from trading activity. The bank expects first quarter net interest income to rise 7%. The CEO remains bullish on the U.S. economy, pointing to a strong consumer. Meantime, Citigroup's investment banking fees rose 35% to $1.29 billion, with the bank also posting a record M&A performance in 2025. The CEO telling employees the bar is raised, also warning of further headcount reduction. And rounding out the banks overnight, Wells Fargo missed profit estimates on severance costs. Its $50 billion net interest income forecast for 2026 also missed estimates. Its CEO warned that Trump's plans to cap interest rates would cause the banks to pull back on lending. In other reporting season news, Biogen shares fell after flagging a $222 million charge to profit in the fourth quarter. Shares fell after a lower than expected 2026 procedure forecast. And copper miners rose, tracking gains in red metal prices. U.S. listed shares of Rio and BHP put in a solid performance on the news, alongside Southern Copper and Freeport-McMoRan. Oil majors also had a good day, including Exxon and Chevron, as well as ConocoPhillips. In other news, crypto and blockchain-related companies had a good day, tracking Bitcoin to a 2-month high. Coinbase Global, Strategy, formerly known as MicroStrategy, surged. Riot Platforms and Mara Holdings all looking good. Well, on the macro front, U.S. retail sales increased more than expected in November, driven by motor vehicle sales and sporting goods. For example, sales rose 0.6%. Meantime, the U.S. current account deficit narrowed sharply in the third quarter as tariffs weighed on imports, thanks to the U.S. president's tariffs. And in other economic news, a Fed survey pointed to an increase in economic activity across most parts of America. Also, U.S. existing home sales picked up in December, boosted by lower mortgage rates and slow growth in house prices. Home sales jumped 5.1% last month. Well, Fed Reserve Bank of Minneapolis President Neel Kashkari said that he's optimistic about the economic outlook and that inflation is to wane. It's just unclear by just how much. And in other Fed speak, Mirren said that Trump's deregulation will help lower inflation, justifying rate cuts, while Paulson reiterated that more rate cuts could follow following a moderating in inflation. Well, the U.S. 10-year yield is at 4.144, slightly lower. And taking a look at the dollar, we have seen Australian dollar trading this morning at around 66.8, higher against the U.S. dollar. In Europe, Germany's finance minister called for a new era of European patriotism to protect regional economic interests, saying the transatlantic alliance as we knew it is dissolving. As mentioned, benchmark 3-month copper on the LME rose 0.4%, touching a record high earlier in the session. And oil climbed as Iranian supply concerns overshadowed an unexpected build in U.S. stockpiles. All the news, including rates and geopolitics, drove gold and silver to fresh record heights yet again. And on iron ore in China, December steel exports came in at a record monthly high on rush shipments, with 2026 iron ore imports expected to surpass last year's record high. On the equities front today, small cap Alcidion has a quarterly update out, and on the macro front, we get consumer inflation expectations locally and weekly jobless claims in the U.S. Also, TSMC, Goldman Sachs, Morgan Stanley, and BlackRock all report quarterlies. That does it for the day ahead. I'm Nadine Blaney. We'll see you tomorrow.